hi guys, welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka.
Hello there, and I'm Yatin Mota.
Well, another day of weakness wherein sell-off has only intensified, Yatin, especially in the broader end of the markets. Even for the Nifty, we broke below that 22,300 mark intraday. In fact, we also dipped below that 50 DMA mark for the Nifty. But, buying support coming in from FMCG as well as IT in the second half, Yatin, that, capped losses on the index. But if you look at the broader end of the markets, Yatin, breadth was extremely poor once again. Advanced decline ratio on the NSE was almost 1:4. Yatin, and the Nifty midcap index was at 1 point down 2%, and so was the case with the Nifty small cap index. Want to mention the India VIX index was once again up 5% at 1 point, although it receded a bit, but it did hit a fresh 52-week high today, 17.6. It went to that level intraday, but cooled off and ended below that 17 mark. Big drags today were, of course, the Nifty PSU Bank Index. Yatin, in a matter of 2 sessions, this index is down over 5%. Realty, that was yesterday's top performer, was down nearly 4% today. Aside of that, you also had pharma and metals. These two pockets also saw a fair bit of drubbing. What did well, as I mentioned at the start of the show, it was the FMCG pack, 2% gains coming in there. Of course, we'll be talking about how the management commentary has propped up the index, and there are hopes of a turnaround and signs of a turnaround in rural markets. That's something that has triggered this up move on the FMCG index. Individually, if you see among the gainers, you had a lot of these FMCG names. So HUL, Britannia, Nestle, all of these stocks were among the gainers, and so were the likes of TCS, Infosys, and Tech Mahindra also jumped to days highs in the second half of the session. Aside of that, you had ITC also, and Kotak Mahindra Bank continues its gains from yesterday. On the losing end, some of the auto names were once again under pressure. So Bajaj Auto, top Nifty loser, Power Grid, ONGC, IndusInd Bank, Hindalco, Tata Motors, these were among the laggards. But Yatin, in the broader end of the markets, a lot of these mid-cap FMCG names were once again, grabbing the limelight today. Take us through some of them.
So, today in the market, only FMCG and IT stocks were in the green, and all of the other sectorial indices were in the red. In fact, the PSU banks and the PSU stocks in general were the top laggards in the markets. Today, the advanced decline ratio was almost 1:4. So, almost for a one stock gaining, there were 4 stocks declining. So the market breadth was extremely weak. In fact, if you look at the gainers in the NSE 500, it starts with Jyoti Laboratories gaining by nearly 10%. Marico, Godrej Consumer reacting positively to the numbers, went up anywhere between 6 to 10%. HUL and Dabur, these are the 2 index heavyweights, or rather index FMCG heavyweights, which moved 5% each. What did not do well is SRF, and post the earnings, the stock went down nearly 7%, and now the management expects the recovery to happen in the second half of this financial year. So the next 2 quarters probably should be weak for SRF. Just Dial, MRPL, Sobha Developers, all of these stocks witnessing some way of profit taking, down 6% each. But the top traded counter today, was REC. That stock also went down 2% after hitting a fresh 52-week high few days back.
Well, of course, REC, PFC, we saw a fair bit of drubbing yesterday, extending losses, and lots of result reactions in the market. We also have the likes of SBI, L&T, Dr. Reddy's also coming out in some time. So we'll be talking about that. But let's talk about the FMCG space in particular. The top gainer today, mind you, it has been an underperformer over the last 1 year. If you compare it with other sectors, at a time when markets were hitting high, we saw a fair bit of underperformance coming in from names like HUL and a whole host of other FMCG names. But today, of course, in contrast with the market mood, FMCG was, buoyant, and, saw a fair bit of buying, a lot of sector rotation happening in the market. It seems so because a lot of money flowing out of PSU banks into consumption stocks, and FMCG index itself gained the most in nearly 2 years. HUL, the heavyweight, gained the most in nearly 5 months. In fact, today was the best day for HUL, on a YTD basis, single day gain. The reason behind this, Q4 has been a fairly good quarter. If you look at the management commentary and, the signs of recovery in the rural market, that's something that has boded well for these names. The Q4 clearly is pointing to a recovery in rural India. If you look at companies like HUL, even though HUL has reported just about 2% volume growth in Q4, it was largely in expectation, on expected lines. The expectations were fairly subdued, and it did come out with the 2% volume growth. But then it has pointed out that there are green shoots of recovery in the rural markets. Dabur's rural business grew at double the pace of its urban business. Britannia also said that good monsoon and cooling inflation bodes well for the rural recovery, and Marico highlighted that it expects rural recovery in FY25. For Godrej Consumer, Yatin, the overall volume growth was at 12% and domestic volume growth was industry leading at 15%. Aside of that, of course, there are signs of recovery in rural markets, but premiumization as a trend has also stayed intact. If you look at HUL's beauty and personal care business, it did well. If you look at Britannia's e-commerce business, that also grew in double digits from last year. So double digit growth for HUL and Britannia when it comes to the premium end of the business. And also FMCG names like GCPL had made acquisitions, right, and they will be scaling up those acquisitions, and that in turn will aid numbers going forward. In fact, Godrej Consumer Management was on CNBC TV18 today, and he has highlighted that they will be sustaining the high single digit volume growth going forward. They've also said that they've derived a 15% cost benefit from the Raymond's consumer business acquisition, and it sees it says that at least 2%, in fact 2x growth from the Raymond's business is something that the management has guided for. So all in all, picture is looking pretty rosy when it comes to the FMCG pack, and this has been the entire pocket has been an underperformer. Correct. So let's see whether all of these sectors that have seen a lot of up move, the money kind of flows out of these sectors and goes into FMCG space or not from here.
Absolutely, and the stock of Godrej Consumer, moving clearly almost 2.5% at open and ended the day higher by nearly 6%. But apart from that, rail stocks are in focus, and the PSU stocks are struggling. But the private sector companies like Titagarh Wagons, and which is now Titagarh Rail, is in focus. Morgan Stanley today initiated a coverage on the stock with a target of nearly 1285. Obviously, the stock post the initiating coverage report moved nearly 6.5–7%. But if you look at the Morgan Stanley report, quite descriptive, it says that the freight business as well as the railways, order booking is quite strong, which will help the companies drive their own revenues moving forward. As far as passenger business segment is concerned, it's a new growth engine, probably moving ahead. The kind of ordering that we can see probably for Vande Bharat trains, for new rail bogies, new freight bogies, that could drive the overall sales growth. In fact, Morgan Stanley is penciling in a 28% compounded annual growth rate when it comes to revenues. They expect that the freight wagon execution, which is close to 1,000 wagons a month, should improve moving forward. And moving ahead, we have the passenger coach segment, which would see some scale up FY26 onwards. So yes, on the earnings front, the brokerage is quite hopeful that there could be a 25–30% kind of a growth rate, which could be possible for the company ahead.
And of course, Titagarh clearly on fast track today, Yatin, on the back of this overweight initiation by Morgan Stanley. Of course, this particular railway stock has also been a multi-bagger. If you see in the last 1 year, it has given returns in excess of 130% itself. But the other stock on my list today is Dr. Reddy's. It will be reporting its numbers shortly, and it is expected to be a steady quarter on the back of strong US sales as well as contribution from its blockbuster drug Revlimid. Now, but there are some R&D investments that the company may have made and new initiatives that the company has taken in the last quarter, and which could cap margins. Net profit is likely to grow in excess of 30% on a YOY basis. Revenues are also seen growing in double digits, somewhere around 13% on a YOY basis. Easing of price erosion in the US as well as ramp up of the recently acquired main portfolio is expected to support earnings growth in the fourth quarter, and the blockbuster drug Revlimid could contribute somewhere around $100 to $115 million to its revenues. Just want to point out that Dr. Reddy's enjoys the highest contribution from this drug Revlimid among all the other Indian drug makers selling this particular drug. India business is also likely to do well, Yatin, expected to grow 5% on a YOY basis despite a high base, and also the fact that it has recently sold, in fact in the first quarter of FY24 it had sold 9 brands, dermatology brands, to Eris Life. So there won't be any contribution from these brands, but still India business is expected to grow 5% on a high base. So that's something that we'll be watching out for. And commentary on US business as well as margin trajectory are some of the other monitorables for Dr. Reddy's. So waiting for Dr. Reddy's, but just want to mention Lupin reported numbers yesterday.
Yes.
Yatin, margin was a beat, but I think profit missed estimates and the stock reacted to that in today's session.
Absolutely, and higher R&D cost impacted Lupin's profit, and more importantly, the stock also witnessed some profit taking. Intraday, the stock dipped, nearly 7-8% in the case of Lupin. But yes, in the case of Dr. Reddy's, a 5% domestic growth, and we'll watch out for the new drug launch pipeline because I think the management usually in the conference call tries to give out details with respect to the US business and the new product launches there.
All right, and those were some of the stocks that were on our radar this afternoon. But with that, we've come to the end of this edition of Closing Bell. But before we do that, I just want to ask you. We know that SEBI has, not really rejected NSE's proposal to increase market timing. Just want to understand your thoughts. Are you happy about it, or are you neutral about it?
It's not about being happy. I think the entire ecosystem has opposed the kind of extension of market trading hour which was supposed to come in, which NSE wanted really to happen. But I think the brokers, with the kind of issues with respect to manpower, with respect to cost, with respect to the kind of human resource which is required really to make it happen, I think the broker community themselves are not ready, and they were the biggest opposers. And according to the news report, I think the broker feedback was not which SEBI appreciated. Hence, there was no approval with respect to the extension of trading hours. Great one. I think brokers probably would have rejoiced this news which has come out.
All right, then on that note, I think it's time to say goodbye to our viewers. Thanks a lot for tuning in, but you guys stay tuned to Moneycontrol for all your other news and updates.